Hi, Greg Lewis, MetaStock Software. You're about to watch one of the presentations from the 2017 Online Traders Summit. I know you're going to enjoy it. Before we begin, I want to tell you just a little bit about us here at MetaStock. We've been in business for about 30 years. MetaStock is about the most powerful platform you can get for the private trader anywhere. You can test, you can scan, you can forecast, you can customize to your heart's content. It's an amazing piece of trading technology. If you'd like to get a free extended trial of MetaStock, I encourage you to go to metastock.com/traders-summit 3-for-1. That's metastock.com/traders-summit 3-for-1, or just click one of the links provided, and you can get 3 months of MetaStock for the price of one. That's an amazing deal. I encourage you to do so. I know you won't regret it. Please enjoy the presentation and successful trading.
Let's talk a little bit about Wendy. I see Wendy's here. She's probably warming up her voice. One of the things I always tell people is my job is very, very cool at MetaStock. I get to work with people like Steve Bigelow, Wendy Kirkland, basically everybody here today I've actually worked with to kind of help automate their systems or get them into MetaStock. And to be honest, I've learned a lot. But I like Wendy's backstory, just to kind of give you a little bit of story about Wendy. She used to run a gift shop, and it got hit by a flood. It was apparently an eclectic gift shop at Biltmore Village, and as a result of that, she actually started to trade. She wrote a book, or she started an organization called Women Option Trades, and wrote a book called Option Trading in Your Spare Time. And she's obviously extremely successful. Probably my favorite grandma outside of my own grandmas. So let's go ahead and bring her on here. Wendy, if you can unmute your microphone, I'll make sure we can hear you. And I'm going to turn the presentation slides over to you as well.
Hi, Jeff. Can you hear me?
Yeah, I can hear you. How you doing today?
I'm doing great. Thanks. But hearing all this news about Irma brings back those memories of the flood days that Francis kind of took the path that Irma is taking, except that it's moved over a little more toward Nashville rather than Asheville. So, but it brings back those memories. I'm sending wishes and hopes that everybody will come out of the storm safely.
Yeah, I had no idea that it was Francis. I know I've known your story for a long time. I just learned last week that it was actually Francis that caused the flood. So
yeah,
and I would encourage anybody listening. Obviously, the hurricanes in Houston and Florida may be devastating. So do take an opportunity to kind of donate and get some money over there and help them rebuild it. It's a good thing. But I digress. Wendy, I'm going to turn the time over to you. I can see your screen, but I see what I see right now. Oh, I see your PowerPoint. So I'm going to go ahead and let you get going. And thanks for coming and joining us today.
Okay, well, thank you. I appreciate everyone else that has taken time out of their weekend to come and join us. You're having the opportunity to gain a great deal of information, some awesome speakers today. I hope to cover some information quickly. And if you miss some portion of it, I know that this is being recorded, and so don't panic. You'll be able to catch up and go over that information again. For those of you who don't know me, Jeff gave you kind of a quick run through, but I have been a full-time trader for 11 years. I do a number of advisories and have written a number of books, from basic trading books for those who are not real familiar with options to some strategy books. And a lot of that information can be found at wendykirkland.net. So today what I'm going to do is cover some information that I have found to be the most successful elements. And it doesn't matter whether you're trading stocks or options or futures or Forex. My thing is options. And I do that because of the leverage that options give you, the fact that you can place a small amount of money into a trade and yet gain the benefit from the leverage of the full move of the equity that's underlying. So the basics that I'm going to cover today is to point out that the most successful elements come from first focusing on equities that are going to have consistent big moves. And so I'm going to show you how to find those. Secondly, we are going to discuss the advantages of zeroing in on equities that are either overbought or oversold. And the reason for that is they have the most room to go to recover. If they're oversold, they have a long way to move toward being overbought. And if they're overbought, they have a long way to be able to fall. Next, we're going to be looking at equities that have either formed a top or a bottom after having been overbought or oversold, and that they have reversed and have started a new trend, and then give a confirmed entry signal. So we'll just kind of jump right in here. I'm not going to spend a lot of time on options, but for those of you maybe that are trading Forex or who buy stocks, I want to at least just cover what options are and the two types. That you have call options, and you would buy those when you expect the price of the stock to go up. Call options give you, the buyer, the right to require the grantor or the seller to sell the equity to you at an agreed upon price at an agreed upon time, no matter how high the price is when you decide to sell your option. They must sell it to you at that agreed upon price, and you in turn sell it for the higher price and keep the difference. And this buy and sell happens behind the scenes for you at the exchanges as you close out the trade. Put options, in a sense, work kind of the same way. You would be buying put options when you expect that the equity price is going to drop or go down. This gives you, the buyer, the right to require the grantor to buy the equity from you at the agreed upon price at the agreed upon time, no matter how low the price is when you decide to sell your options. They must buy it from you at the agreed upon price, and you in turn buy it at the lower price and keep the difference. And this again happens behind the scenes for you. So just as a quick example of this, if you were to purchase options, say on Boeing, the aerospace company, and its stock is priced at 150, and you're interested in contracts for the 150 strike because you feel the price is getting ready to move up, you pay $3 per share for the 100-share contract that expires, say, in 2 months for $300 per contract, and you decide to buy 2. So that's a total investment of $600. And let's say the stock price goes up to 155, and your premium is now $7 per share, and when you decide to sell. The transaction happens behind the scenes at the exchange. You paid $3 and you sell for $7, and you keep the $4 difference. And because you have 200 shares, you've realized then an $800 gain on your $600 total investment for those 2 contracts, or that's 133% profit. For those 2 months that you held those option contracts, you controlled the price moves of, let's see, it was 150, so that's $15,000 worth of Boeing stock. And because you had 2 contracts, that's $30,000 worth of stock that you controlled the price moves on for the investment of $600. That's where that leverage comes in. Okay, so our first element was to trade stocks that have big moves. And the way that you can do this is by adding an indicator called the average true range, or ATR. Most charting services has this indicator, and MetaStock is one that certainly does. You add this to the bottom of your chart, and you're going to be looking at a daily chart because you want to know what its average move is per day. And you're going to be looking for an ATR of 1.5% to 2% a day. And so in this case, we have Northrop Grumman, and we can look and see that its average move is just over $3. And 1.5% move at the price of 190 is 285. So that gives you a more than 1.5% gain on this stock on an average. Whether it's up or down, it moves more than 1.5% every day. So you can start creating a list of stocks that you're going to focus your attention on that have big, consistent moves. This is Alibaba, and its ATR is down here just under between, it's like 2.25, 230, and I can easily look at this and see that at $83, that's $1.60. So again, this is way up within the range of being a good candidate, and I would add this to my list of equities that I'm going to focus my attention on. And then you've weeded it out, and you're focusing on stocks that have the benefit of having big moves. Okay, we're going to next add the second element to the most successful trades is using something that's going to tell us when a stock is overbought or oversold. And one of my favorites is the Commodity Channel Index. So this is the set with special parameters, and so we're adding the Kirkland CCI to this. It's very easy to read that once it moves up above 100, it's in the overbought zone. When it's down below minus 100, it's in the oversold zone. I sometimes call these the fins. If you think of them as shark fins. I know that you just had listened to a session on fishing, and so here you have the shark fins that are kind of above the water, and then you have the lower fins are the oversold. So we're going to be looking, this is the first element, for equities that have been recently overbought or oversold, depending whether we're going to be doing calls or puts. And we're going to focus on stocks that have a high ATR. Okay, the next indicator that we're going to add is the percentage price oscillator, or PPO. And so again, have special settings. This is the Kirkland percentage price oscillator. And a lot of traders are familiar with the MACD, the MACD, and the PPO is read kind of the same way. The direction of the cross, in this case of the red line over the blue line, tells you the direction of the upcoming price move. So here, furthest to the left, we have a cross down, and you can see that the price starts dropping. Then we have a cross up, and before too long it crosses back down and then crosses back up again. And you can see each time that it swings back and forth, price has moved in that direction. Then here in the first part of October, we have a cross up, and it lasts all the way into November. Then we have a cross down again, and you can see that price pulls back and it drops a little bit. So this is an indicator that is very easy to read, but it tells us about trend. It's telling us that a trend change is starting to take place. So now we've added the two elements. One is the fact that it's been overbought, oversold recently, and that we have a trend change. It's hit a bottom and has changed direction. All right, the next one is the Kirkland oscillator. And this is set up with one line and what I call it, we have set a zone in the setter that we're using for our entries, and I call it a touch zone or a buffer zone. In this particular chart, the lines are rather tight. Sometimes they're a little bit wider. This is Chipotle Mexican Grill. And so our entry for, in this case, a put, would be when it crosses down out of the lower level of the touch zone or buffer zone, and that would be a entry period for a put. We're going to put all of these together, and so we're going to start. I've kind of switched things around here and put the CCI on top so that we can see the areas that are extreme oversold. Then when it rises up, it kind of moves into being in a trading range, and you can see price-wise that it's kind of flat. Our indicator below that is the Kirkland or the PPO, and again that is the crosses of the lines, and then we have our entries. So looking at this as far as a trade is concerned, we can see on the CCI that we have been recently oversold. Next, then we look and we start following the PPO and look for a trend change. And so on the September 8th about, we have the cross up of the PPO. So we know now it's gone from being oversold, we have a new trend. And the entry is when the Kirkland oscillator crosses up and out of the top of this touch zone or buffer zone is our entry. In this particular case, we had just a little pullback before it really headed up, and so we actually had a second possible entry. So if you'd missed this entry, you could have entered at this point as well. And let's see what happened if we then followed this up. Went up to being overbought. The Kirkland PPO did not cross until late in November. And as far as then going into a put trade, an opposite trade, it never really did cross out of the lower zone. So that never gave a contrasting put entry, but it certainly was a very successful call entry, whether you entered on the first opportunity or the second. Okay, this is another trade that we can kind of look and follow it through the progress. The first indicator that you're going to be looking for is the fact that it has been recently oversold. Here we are right at a PPO cross, and yet on the Kirkland oscillator we do not have a cross yet up and out over the top of the buffer zone. So let's follow this along. CCI has remained kind of in the buying territory. PPO has crossed up and over, and it's got a little white space between the lines. But the Kirkland oscillator still has not moved through that touch zone. It's trapped. Still within the buy area here on CCI. PPO got tired, crossed back down, back up again. And the Kirkland oscillator still has not gone through the upper zone. And what this has done by waiting for this cross of the Kirkland oscillator is the fact that it has kept you out of a trade where your money was tied up for nearly a month. It just was not ready to really yet get going and moving. Okay, here we are now. This is the point where it touched. We finally had an entry here the first part of October where it popped up above, and then we were in the trade until we had the PPO cross back down in November. So let's look at what happened, or I could tell you the dates here. Entered on October 5th, and we were out on the 27th of November. So this is what happened with that particular trade. Some general rules is the fact that I have discovered that a 2.5% to 4% equity move often equates to a double in a weekly option premium. And this is the reason we're looking at the ATR and why it's so important. An 8 to 10% move in the equities price move is a double in a monthly option premium. And so this is why we're focusing on the equities with the big moves. So in the case of the trade that we just were watching, we purchased calls after the open on October 5th when the Kirkland oscillator crossed through that touch zone for $2.90 a share, or $290 per contract, for the January 92.50 call. And we say we bought 2 contracts for a total investment of $590, and I just zero in on about $600. I figure that I'm a kind of an average trader, and so that is an amount that most people in an average size account can manage. You sell then at the end of the day on November 27th, and the contracts were then worth $7.55, or $7.55 per contract, and that's a gain of $465 for each of the 2 contracts, or $930, or 160% gain. And this is the reason for the leverage and for wanting to enter a trade at exactly the right moment and not have your money tied up. You could have been in a couple other trades during that period of time when money would have been tied up where it just went flat. So Visa's price when we entered was $61. We sold when it was $69.84. That's a $8.78 change in price. That's a really nice 12% increase in the price, and yet what you made on the option was 160%. That is the leverage of options. And for your $590 total investment during that period, you controlled $14,000 worth of Visa stock. And had you invested $14,000 if for the stock, if you had it purchased it, you could have purchased 49 contracts for the same investment and earned $22,000 in profit during that month and a half or so. And so that's a great example of how you can benefit, invest just a small amount, and benefit from the price move of the equity, where you have full control of the amount of profit from the stock. All right, let's look at another quick example here. This is Allergen, And we can see on the CCI here, it was recently oversold, has moved up above the minus 100 line. This is how we read it, below the 100 or above the minus 100. We're right at a Kirkland PPO cross. And as far as the Kirkland oscillator, it has not yet moved up above the buffer zone. Okay, the CCI now has dropped down back below 100. PPO has dropped back down. Here the Kirkland oscillator came up and touched the buffer zone and dropped back down from it, almost like it was hot and it pulled away. It just was not ready yet to head up. So now, another couple weeks later, we have the CCI back up above the 100 line. PPO has crossed back up the red over the blue line here in our example. And the Kirkland oscillator is heading up, but it still has not moved up above that upper boundary. Another couple weeks went by. We're still in that zone as far as the CCI. Kirkland oscillator is crossed up, and the PPO is crossed up, and the Kirkland oscillator is right now at the point of crossing the upper barrier of that buffer zone. So now is the trade entry time. So this is where we would have gotten in, right here at the beginning. You can see that CCI continued to rise, got up here to an extreme area. PPO started rolling over and crossing down. This was our exit, and this was kind of the exact moment that we got in, came up here, and then you can see how it also started rolling over. But we're using the new trend line here, new trend direction for our exit. So as far as the results of this particular trade, we purchased calls after the open on October 26th when the Kirkland oscillator crossed through that touch zone for $17.40 a share, or $17.44 a contract. And because of the price of this particular contract, we only bought one. We sell at the end of the day on November 4th. And at that point, the contracts are worth $40.30 a share, or $4,030. And so that was a gain of $2,290, or 132% for just that one contract. The price of the stock when it entered the trade was $2.65. When it sold, it was $3.08. That was a hefty $42 change. Was a 16% increase in that stock's price over that trading period, yet the option increased 132%. So you're investing with what would be the equivalent of a down payment. And over that period of time, you controlled stock that was worth $26,500. Had you placed that same stock investment, you could have purchased 13 contracts and you would have made or earned a profit of $29,000. Most people would not ever be able to invest that amount of money into one trade, but it just goes to show you that leverage that you have, that options to me is the trade vehicle for the average trader and gives you that opportunity to be able to capitalize on the price move of the underlying for just a percentage of what the stock price would be. So let's look real quick at a put trade, and get back to where I'm supposed to be here. All right. This is Newmont Mining. And so we have it being recently overbought. As you can see it here, that there's the fin at the very high point, has dropped down below 100. We have the PPO has crossed down, red line over blue heading down, and we're waiting now for the Kirkland oscillator, has dropped below the lower area of the buffer zone. And so now this is our entry signal. This is the point where we would have entered right here on June 8th, say, and drop down and exit somewhere in the around the 3rd of August. And so you captured the drop in price during that period of time through your put trade. So you purchase puts after the open on June 5th when the Kirkland oscillator crossed through that touch zone for $1.25 a share, or 125 per contract. And we'll say that you bought 5 contracts, again kind of keeping it in that between $600 and $1,000 range that is manageable in most people's account. And you sell at the end of the day on August 10th. These contracts then were worth, I can see there's a typo here, it says call contracts, and it should be put contracts, were worth $7.95 or $795 per contract for a gain of $3,350 or 536%. I mean, that is gigantic as far as a percentage gain. So we've now covered the elements, and you can apply all of these into your everyday trading. I am so happy to share that MetaStock has incorporated all of these requirements and the elements that create the most successful trades, and they have incorporated it within their programming, and we're going to look at that in just a second. But let me again kind of recap what we have talked about. One is zeroing in on stocks that have big consistent moves, and we do that by checking them out as far as the ATR, average true range. Then we look for stocks that are either overbought, oversold, meaning that they have a good way to go to recover to a previous level. And then we want them to have put in a bottom or a top and are reversing and have started a new trend. And we do that through the PPO. And then we look for a confirmed entry signal. And this cuts out many of the false starts or shakeouts where the market makers give you that little hint that it's going to go up and then it drops further and so on. And our trades can hit stops. And that can be very, very frustrating because you want to follow your trade rules. You get in a trade, you think it's ready to move up, it drops further, you have to exit, and you end up paying fees and other fees, and then deciding, well, now am I ready to get in? You know, you get to be a little bit gun shy. And by using the Kirkland oscillator, it cuts out a whole bunch of that. And once it pops over that upper buffer zone or lower buffer zone is a confirmed entry. So this is what a simplified MetaStock chart looks like. And I'm pleased to say that they actually have created a scan so that you can scan through the high ATR charts and look for equities that are either putting in a confirmed entry as far as a put entry or a call entry. And look at how simple it is as far as seeing here on the bottom whether it's bullish or bearish. Now, they also have a version that is more complicated in a sense for the traders that want to be able to actually see the move. This is another one I think is still just the more simplified version, but look very clearly, this is your sell signal, and you can see the drop and then the change in color where it turns bearish, bullish, and that would be your entry, exit. Looking at it, thinking about it going back up again, but this would be your entering your put trade, and when it turns green here would be your exit signal. All right, here we go. This is the more intricate version of the chart. Now, there's just some of us that want to see it with our own eyes and see it happening and run things through their course. So MetaStock has set it up where you not only have your buy and sell signals, you have your color guide here. You can see where it's overbought and oversold on CCI. You can see your trend moves and the crosses over of the PPO line, and then you have your Kirkland oscillator that marks, like right here in September, you can see that it crosses over the upper area of the buffer zone, and you glance up here, and there you are. There's your buy signal. It got an arrow pointing right to it. If you look back further, you can see another right when it changes. Right there, it's pointing to the candlestick. This is like X marks the spot, and then up it goes. This is an example of a scan that was run, and you can then pick out the equities that you like and the sectors and so on that you're interested in, see what the ATR is, and then focus on those stocks that you're interested in that have popped up on the scan. I think Jeff has some information that he probably can add to this. Over on the right-hand side is listed the breakdown of the CCI and what the ATR is and what the sentiment is at the moment as far as the PPO and the Kirkland oscillator being, in this example, both bearish. Jeff, are you there?
I am. I'm typing up answers. All these people listening. Gerald, I was actually answering your question, can this be used on a 60-minute chart? And actually, yes, it can be absolutely used on any time frame. In fact, I'll show this in a second. But based on the time frame that you're using, it'll actually give you advice in terms of what contracts or what option contracts you should be looking at based on the time frame that you're on. So in any case, Wendy, good job. I'm going to show a little bit off about kind of the stuff that we developed with a lot of your help. Is that good?
That would be awesome. You are the expert on MetaStock and the program, so go for it.
All right, let's make sure we're sharing the right screen. Okay, here. There are a few things. You should be able to see my MetaStock open, and I've got my chat window open, so if you have questions as we go through this, please feel free to answer. Before I kind of come in here and show you kind of how this works, I want to talk a little bit in broader strokes about the add-on we developed with Wendy. So the things I like about it, here's kind of a picture of the box, but it's actually a fairly well-rounded methodology. It uses ATR, as Wendy was talking about, to help you find the stocks with the best opportunity. And a lot of the things that I've kind of learned over the years is you really want to kind of step over kind of the crappy opportunities and find the best ones. With Wendy, what she does is she uses average true range. How much is a stock moving? Because the more that it's moving up or down, the more that it kind of has a true range, the more that you can kind of potentially get stuff out of there. Helps you identify also when the stocks are at a turning point, notifies you when the trend has begun, and has some stuff in there that helps protect you from whipsaws. And so it's fairly well put together with this. The indicator package itself includes like the PPO, the oscillator. We didn't include the ATR because the ATR was already in MetaStock. But it also has like your expert, your exploration, and your templates. And let me kind of give you an idea of how this works inside of MetaStock. I've got let's try that again. Let's go back. This is kind of how it's worked, at least on the Dow Industrial Average over the last several months. A big, powerful feature of MetaStock, and one of the things that people really like about it is, this did have what looks like was some very good opportunities back here, but there's not been a lot going on in the chart recently. So how do we find ones that have a buy opportunity that exists on the market today? And to do that, what we do is we use scanning. Now, when I open up, this is what we call the Power Console in MetaStock, and when I open it up, basically it allows me to kind of come in, and after I've got Wendy Kirkland's stuff installed, it allows me to go in and kind of run a couple of different explorations. Now, the first one right here, you'll see there's two that started with WK. That means Wendy Kirkland, you probably guessed that already, but you'll see that there's two. There's a pre-filter one. And the way you would use this pre-filter is you'd run it probably every 2 or 3 months. What it's going to do is it's going to go through, like if you want to kind of go through all the, let's say the optionable stocks, and just have the ones that Wendy would recommend, it's going to filter out anything that's, is less than 25 bucks and doesn't have a volume greater than 950,000. So you can use that to kind of build a little bit of a watch list around what you want to scan every day. Okay. Once you've kind of got that watch list, the scan that you're going to run every day is going to be called this automatic swing trader. Okay. And so what I'm going to do is I'm going to put a little check mark here, and this will allow me to say, okay, I want to find buy signals that exist in the market today. Okay. And this could be buy signals to go long or short, depending on kind of like what it wants to do. Kind of gives you some description if you hover over it exactly what it's looking for. One of the things that I like a lot, and I know a lot of you have been asking throughout the day, does this work on Indian stocks, or does this work on Australian stocks, and that kind of stuff. And I want to tell you, even though this is designed for options, we get all of our data through Thomson Reuters, and we have literally about 381,847 different instruments you can look at. And I like the way they've kind of broken this down, because you can go in and drill into Asia and you'll see all the Asian exchanges. Or if you're interested in Europe and you want to go to London, you can just click on this little Europe button. It'll expand and you can find the London stocks that are pretty easy. Okay. In North America, I realize a lot of you are going to be in North America. You might be interested in ETFs. You might be interested in options. You might just be interested in stocks that trade on the NYC. And if you see here, we've got them all broken down. So literally, I could go in and run run this exploration and find all the buy and sells on this particular system against the optionable stocks just by clicking the Start Exploration button here. It's basically going to go through all 4,300 of them and give us a list. Now, the way I actually ran this scan to get ready just to show you some things is, instead of doing all of the optionables I wanted to run really quickly, is I just came in here and I said, okay, well, I want you to run a scan against all of the stocks on the S&P 500. So this is a scan that I ran. It only took a couple minutes. I'm not going to run it right now. I'm just going to show you the report that was generated off of that. Okay, so to do that, what I'm going to do is I'm going to right-click here. I'm going to go to Report, and you'll notice that you have longs and a short column. Now, this one just means there's longs on Conagra Brands, D.R. Horton, Fed Realty, Fortune. As of Friday, I ran this on Current Data and Hershey Company. Okay, there was 2 shorts that were generated. They were Hewlett Packard and Royal Caribbean. Okay, you'll also notice this average true range. And remember what I said: ATR equals how much it moves in terms, and I believe this is expressed in percentage in a given day. Okay, so the ones with the larger ATRs are going to be kind of the ones that have more potential opportunity. Okay. Now what I'm going to do is actually just show you how this kind of reflects on a chart. So I'm going to go ahead and open up the chart. Okay. It's automatically, because the template I've got selected is the Wendy Kirkland template, And we can kind of just come in here. This is a daily chart, by the way. I'll go ahead and kind of zoom in just a little bit, and you'll see we had a buy opportunity that came in right about here, down at 115. Now we're getting a little bit of a sell opportunity. We had a buy opportunity. Now, we did have like 7 or 8 stocks we can look at. So now that I've run that exploration, if I just click on this little next button, I can automatically go into the next Kirkland opportunity. We had a buy on UDR. All of the indicators are applied for me automatically. And we can kind of see how well it's kind of performed on any particular chart and kind of choose the best ones. But you'll notice here, we're not looking at all 500. We're just looking at the ones that have the best opportunity. And instead of looking at 500, we're looking at 7. So it's a really good way to save time. Okay. Now, Wendy did a really good job of explaining the methods that she uses. She always does. And she kind of talked a lot about the CCI, but you're probably not going to remember it, or you might need a little bit of a jog to the memory, so to speak. And so what I want to show you is kind of how we kind of advise you once you get one of these signals on how to kind of take a look at that. So what I'm going to do is I'm going to click on the view button right here, and I'm just going to open up what we call our expert commentary. Okay, and it came over on this other screen, so let me pull it over here. Let me undock that. I don't like it over there at all. But this is just a little window. I can move it around. I can dock it off to the side. I don't like it to dock it to the top or the bottom. And I'm having, let me just kind of get it to exactly where I want it to be. Okay. Okay. Having a little bit of an issue with the screen resolution between my 2 monitors because it wants to stick over on that other monitor. But when I move it over here, let's do this. I think I got it now. Okay, good. Now I'm going to kind of just dock it over to this side. This is where I like it to be. You can also put it on this side. As you saw, you can put it on the top or the bottom. Now what it's doing for us right now is you'll notice that we're kind of in a bullish trend. All of the indicators are matching up. That's why it came up as a scan. And you'll notice that there's a little bit of a bar right here that's telling us that it's looking at today. So this little triangle that's pointing down at the bar is telling you that it's looking at Friday, 9/8. Okay? It's going to give us the indicator values. It's also going to give us anything that's particularly important about this. The automatic swing trader is currently signaling a long opportunity. Kind of gives you a little, this module is taken into account special CCI parameters for recent oversold conditions, the PPO cross, signaling a new bullish trend direction, and the Kirkland oscillator. Now, I am using a daily chart, but you can use this on any time frame that you want. And this is, Wendy wrote this herself, and I think she did a really good job, but it's going to tell you very, very specific recommendations depending on kind of like what chart that you're looking at. So if you're, and what I mean by that here is I'm just going to make this a little bit bigger so you can read it along with me. If you're interested in taking advantage of looking at this opportunity, you should look at long buying the stock. If you're an option traders, you could consider intermediate term call options 2 to 3 months before the expiration when the signal is based on a daily chart. So since this is a daily chart, you'll be looking for an expiration that's 2 to 3 months out there. If you're looking at a 60-minute chart or an hourly chart, you'll look at 2 months out. If you're on a 30-minute chart, you'll look 2 to 3 weeks. And if you're on a 10 to 15-minute chart, you'll look for 1 to 2 weeks before expiration. Okay? These signals will last anywhere from 4 to 6 weeks. Option traders will typically look at a call options that are out of the money or one out of the money, or at the money. I'm sorry. I'm glad you can read this by yourself. Are at the money or one out of the money, you'll look for a delta of about 40. Conservative option traders should consider the call option with more intrinsic value, usually 1 to 2 strikes in the money. So she's telling you it's a good idea to go long. Here's the option strategies that you should be kind of looking at very, very precisely. She'll also tell you exactly when you should look to get out of that. You should place a stop loss order at today's low or yesterday's low, whichever is less. Once in an established trade, traders should look to exit the positions at least 2 weeks before your expiration date, unless the position is very deep in the money where time decay is no longer an issue. Okay? She goes further. Once the trade is open, you should place a stop loss order at $34.12, and you could consider a stop loss at 20 to 25% below your initial entry. So did a good job here. I'm going to go ahead and mute some of that background music or background noise that you're hearing. I've actually kind of completely spelling this out. What do you need to do? What can you do? So basically, kind of like to kind of sum it up, this gives you Wendy. It allows you to kind of scan and identify just the opportunity that exists in the market. It allows you to sort that opportunity by basically what moves the most in a specific day. And then it gives you very, very specific advice on what options you should consider, where you should put your stop losses, all that kind of good stuff. And you'll notice that I'm not kind of cherry picking values. This is kind of something that these charts that we're showing you. The only reason I'm showing to you is they came up on the scan from Friday. And you'll see that some of the trades don't work out. You would have exited definitely on this buy position on a stop loss. This one was really good. This one was pretty good. And now we're getting a buy signal. Okay, so it does a really good job of kind of helping you position yourself, figure out where your trade needs to go, how to kind of leverage that with an option trade, and exactly where to get out of the trade. Wendy did a really, really good job with this particular add-on. Bill says it's like having your Wendy in your computer. Yes, that's the thing I love about kind of these expert commentaries. And if you guys know much about me, I really, really like to kind of get as specific as you can, because theoretically, Wendy can't come and sit over your shoulder and help you trade every day. It might be a service. You might be able to kind of join some of these guys' chat rooms, or you can go through their training. But this certainly doesn't replace any of the training that they offer, but it certainly does help you kind of remember the core concepts as well. So very, very good point. Am I sharing both screens? Let's look here. No, you should just be able to see one screen. Oh, yeah, Trey, because I was having issues with the two screens. You made me nervous there, Trey. I thought I was sharing two of my screens at the same time. So, in any case, that's kind of the way the product works. It's been very, very popular. It is one of our best-selling add-ons. And that's kind of like why I decided to feature this at our September summit. Again, there's the indicators that it includes. We are doing, actually the pricing on this slide needs to be updated. It's $4.99 normally. As a summit special, it's $399. That'll give you access to MetaStock if you need it. The Zenith platform will be running a boot camp on September 20th at 6 p.m. It does get you 2 years of stocks and commodities and a 30-day money-back guarantee. So if you want to take advantage of that, just that one, give us a call at 800-882-3040. You can also visit us online at metastock.com/saleschat. What I would encourage you to do is go ahead and order all three of the add-ons that we're talking about today. And we've had a few orders come in right now. But you can get all three of these add-ons, Steve Bigelow's, Wendy Kirkland's, and Rick Sadler's, for basically, if you bought them all individually, you'd pay $12.97 for them. We're offering a summit special price of $899. And in addition, I'm calling it a trader's toolbox, but here's what it includes. It's going to include a money-back guarantee for all three of the products, 2 years of Stocks and Commodities magazine. That by itself, if you just go up to their website and subscribe, it'll cost you $150. We're going to give you, as part of that pricing package, 3 months access to MetaStock DC. I'm going to do the boot camp on September 21st at 6 o'clock Eastern. And we're also going to give you a home study course that includes a little bit of a workbook that'll kind of bring you up to speed on this. The risk here for this offer, if you decide to cancel it within your first 30 days, is $59. So you pay $8.99. $59 of that price is actually for the MetaStock subscription with the Reuters data. If you decide that you don't like it, you're out just basically $59. So the risk reward is pretty good there too. Give us a call. We do have a couple people that are here in the office today. We've got Bobby and Edward. They're both really, really good. They're going to. You can call them at 800-882-3040. You can ask them any question that I might be missing in the questions right here. You can visit them at metastock.com/saleschat as well. Bill says we're all consenting adults here. Yes, we didn't force anybody in here. Trey is saying hello to Fausto. Fausto's our next presenter. Paulette says both you and Wendy are great. Thanks, Paulette. I appreciate that. So the money back guarantee, Matt, just to kind of go through what that is $8.99 is going to be broken up between Steve Bigelow, Wendy Kirkland, Rick Sadler, and a MetaStock subscription. The MetaStock subscription that you're getting is a value of about $59, and the way we're pricing that out for you is you pay $59 for your first month, and we don't charge you again for 3 months. So kind of it's a 3-month access to MetaStock. If you decide you want to cancel, you have 30 days to do so. Basically, and that includes any part of the package. Let's say that you're insane and don't like Steve Bigelow's product or one of the other products, and you just don't think it's helpful, you can cancel just that part of it, and they'll just refund you for that part of the purchase. Or you can cancel the whole thing. And if you cancel the whole thing, the only thing that you don't get a refund for is the $59 subscription. I will add that you still get 2 years of stocks and commodities. You can still come to my special boot camp, and you'll still get access to the Unleash the Power of MetaStock course. So I'd encourage you to go ahead and try it. The risk reward on it is really, really good. Hopefully that helps. The monthly fee comes into effect after that. Our sales guys can actually, after 3 months, Paulette, and it's only $59 a month for an hourly updated version of MetaStock. Our sales guys can kind of go through that with you if it's not clear. Bill, don't worry about the other screen. I was having a little bit of a problem, and Trey made a comment, and I kind of confused it. I was having a problem bringing my commentary from one screen to the other, and he's like, you should just use one. Don't overcomplicate it. So he was trying to give me some helpful advice. So again, the phone numbers, just real quick, are 800-882-3040. Visit us online at metastock.com/saleschat. A good way to get a hold of us. And thank you for those of you that have already ordered as well. Okay. Trey asked a really good question. Does $59 include everything, or equities? What does it cover? That's a really good question. I'll tell you real quick because we're running out of time. It includes a region. Okay. So those regions are North and South America, Europe, Middle East, and Africa, or Asia Pac. So you pick one of those 3 regions as you're kind of getting set up. That includes everything in that region. So if you sign up for North America, what you're going to get is you're going to get all of the U.S. and Canadian equities. You'll get futures. You'll get all the indices, and you'll get Forex as well. So Forex is a little bit of international, right? So we include them in every package. It includes all of the data from a given region. Good question. Okay. I do want to throw out a quick shout out to our sponsor, Stocks and Commodities Magazine. We love those guys. Hopefully you took advantage of the trial. Great magazine, great articles every month. If you just subscribe to the free trial, you're going to have 17,000 archives that you can go and look at. They've been publishing since 1982. And again, if you do any of the purchases of MetaStock today, you're going to at least get 5 months, up to 2-year subscription as long as you spend $300 or more. Okay. We did talk a little bit about MetaStock already. I showed you kind of how the scanning works. You can also test trading ideas with it, get statistical forecasts of kind of what the price is likely to do, get real-time alerts. I showed you commentary, one of my favorite things in MetaStock. Starts at $59 a month, and it's been rated #1 in stocks and commodities 25 years in a row, and we're proud of that. Thanks for all of you guys that go out every year and vote for us.